Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 4th, 2016. Well, the market is testing us right now. It is testing us in several ways, and I'll show my ideas on that in just a minute. But first, let's take a quick look at the chart. So here is the S&P 500 on a daily chart, and if you've been following my updates, you know that I believe we are still in a bear market. But that's hard to believe if if you've been watching this from mid-February all the way through March, this move up. If you look, we've got lower lows, lower highs, and so far still lower highs. So the pattern, if you draw a regression line down through these highs, there's a downward trend line there. But again, this is testing us for sure. Now the current resistance level, the level that we expect that this would reverse from, would be, it's currently sitting here at my line at 2083 actually. And even if it goes above 2083, that doesn't mean the bear scenario is over. It would have to go through this level up here. And even if it does, even if the market is not in a bear move and it's going to go make new highs, I don't think it would do it with any kind of momentum and significant highs. The May high is sitting up there at 2135, and if we did put in new highs, it would be fairly minor, I think. So it's really hard to build a case for going long on stocks that are participating, that are moving pretty much with the broad market. Now I do think this move up is really unusual. We had this one back here last fall, but this one's actually been a little bit longer, and it's just due, even if it were going to go on and make new highs, the market does not move in straight lines, and it's very likely that it'll reverse at some point. Now I think the bear market will get back underway and we'll put in lower lows, lower highs, lower lows, all the way down. But even if it's going to make new highs, it's going to pull back at some point before it heads up. And I think that's just overdue. Type into the comments area, what do you think? The week of April 4th, 2016, do you think the S&P 500 will close by the end of the week, by Friday's close, up higher or down lower? I say down lower, but I'd be curious to hear what you think. So type your comments in there and we'll see how it goes. That'll be fun. And I said it's hard to build a case for going long on stocks that participate in the broad market trend. There are stocks that in other sectors that are doing okay. We're long some other stuff, but for stuff that participates in the broad market, it's hard to build a case for going long. I don't think there's much left, and it's hard to build a case right now for going short. It hasn't proven that it's the bear market, the next move down has started. So it's frustrating, and the market is testing us. And I think the market is testing us in three ways. I think it's testing our patience. You got to wait for the market to have clear signals. And, just like fishing or other things, sometimes you just have to wait. You have to wait for the right conditions. And it's really testing our patience. It's testing our resolve. You got to have a plan. I'll talk about that in a minute. You got to follow your plan, but it's testing our resolve to do that, because it's easy to get impatient and to want to jump in, to want to be trading, stuff like that. It's testing our discipline. We got to have a plan, we got to follow it. Here's a great saying that if you're going to participate in the market, you got to plan your trading and you've got to trade your plan. And when the market isn't doing what we expect, or if it's just channeling or whatnot, or like now it's in a trend that we really don't think has any momentum, but it hasn't turned down yet. It tests our patience, it tests our resolve, and it tests our discipline. And this is where the really successful traders and investors shine. Sometimes the best thing to do, the best trade to take, is none at all until things are clear. So it's testing us, and it's not that much fun. We're not here to have fun necessarily. We're here to be profitable. So we gotta have a plan. We gotta trade our plan, and that's what we do. So for right now, we really wait in terms of the broad market. And again, it'd be fun to hear your comments, whether you think the market will go up or it will go down next week, from the open on the 4th till the close on Friday. So type your comments in there, and we'll follow up and see how well we did. In terms of economic news coming out this week, it's a little bit light. Tuesday the 5th, we've got international trade is a red star day. It's kind of a big deal. We got the petroleum status report coming out on Wednesday. That affects oil pretty significantly. We got the FOMC minutes coming out on Wednesday. Now they've already done the press release a couple weeks ago after the meeting, so the minutes really they'll show some detail of that, but there shouldn't be any big new news out of that. Jobless claims on Thursday, so kind of a light week in terms of planned economic news. Nothing really big coming there at this time. I showed this a couple weeks ago. This is an interesting indicator. This is the CNN Fear and Greed Index. We're at a really high level of extreme greed, and there's some interesting research that shows that extreme greed comes at market tops, and that typically when this indicator's been this high, a correction, a reversal in the market heading down is the next move. Now, I don't trade based on this, but it's interesting to keep track of. It's kind of fun. Here's gold. We always take a look at gold every week, and this is a gold futures contract. We called this recovery in gold back. We said when it crossed 1113 that the recovery was on. It shot way up. It's pulling back now, and I've got my Fibonacci retracement lines on here. And the expected retracement area after this big move would be down 38.2% to 61.8%. Those are Fibonacci retracement levels. And we're getting really close to that. And you can see our oscillator has gone negative just a little bit. This is actually a really good sign. When this correction gets down into this zone, we're going to look for it to show evidence that it's heading back up into the next leg, and then we're going to get excited about gold and gold-related trades as well. So this is actually good news. Things don't move in straight lines. Like I was talking about on the S&P, when we get a big move like this, it's inevitable that at some point there will be a correction to that move, even if it's going to head up again. I think that's what's going to happen here with gold. So it'll be fun to see it get down into this range here, and then be looking for opportunities to go long on gold again. It may take a few weeks or a month or two, but that's the pattern. That's the high probability. Continue this pullback and then another leg up. So we'll be watching for that really close. I also like to update oil every week, and here's the oil chart. Now, oil, I had said before, if you've been watching these, that I thought the recovery was underway as it went through 3709. I said I think this recovery and retracement in oil from the long downtrend had started, and it blew through 3709. It went up. Now it's reversed off of that, and it's come down for several days now. And initially 3709 looked like a pretty good support level. We're down through that at closed Friday at 3679. Now this doesn't kill the theory about the recovery in oil. Let's get my pen out here. So oil, this whole move down was a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then that pattern was broken with this, and this wasn't a new low and a new high being put in. Now, in order for this theory, my theory about the recovery in oil to fail, we could view this whole thing as a new high, and this could pull back pretty far. And as long as it doesn't put in a new low, and if it goes through some like a support level here, that might be a concern. But as long as it doesn't put in a new low, it could come down pretty far and reverse back up into another major high. So the scenario for the recovery in oil is still on. It may take a little bit of time to work out. Would have been nice to see it reverse off of this level and head up, faster, because there's lots of trades there. But we'll just have to let the realities play out. But the thesis for oil recovery isn't over yet, and it could go down quite a ways still before, and still have that thesis be intact. So I'll just continue to update that. We'll watch it. It will not be boring. So that's it for this week. Stay tuned. Again, it'd be fun if you put your comments in on what the S&P 500 is going to do. So that's it for now. Look forward to seeing how it plays out, and we will catch you next week with the update. Thanks.